Good morning, traders, and welcome to BCR's morning market analysis, where we cover the fundamentals, technicals, driving price action across key markets. First up, let's have a look at the US dollar index. After sliding earlier in the week, the US dollar index rebounded slightly, closing last week just above 98.3. It still ended the week down around 0.5% as expectations for a Federal Reserve rate cut and new tariffs weighed on sentiment. Weekly unemployment claims came in higher than expected, adding to last week's weak non-farm payrolls and signaling a cooling labor market. On the policy front, President Trump nominated Stephen Millan to the Fed board, and reports suggest that Christopher Waller could become the next Fed chair, a move that's reinforcing September rate cut expectations. The new tariffs, ranging from 10 to 41%, took effect on Thursday, adding to concerns over economic growth. Technically, the index remains within an ascending channel, but is trading below its 9-day moving average at 98.85, with RSI under 50, indicating a bearish bias. Resistance is at 98.85 and 99, while support is seen at 98 and then 97.7. A break above 97.7 could see a move towards 97.1. Next up, let's have a look at WTI crude oil, which extended its decline last week, hitting a 9-week low near 62.2, which is down almost 6% for the week. The sell-off comes amid reports of possible US-Russia talks on Ukraine, which could ease supply concerns. OPEC also agreed to increase production by 547,000 barrels per day in September, which added further downside pressure. Technically, prices are holding around the $62, $62.19 support zone, which aligns with the 6th of June low and could indicate a short-term double bottom formation. Long lower shadows on recent daily candles suggest that buying interest at these levels is there. If this support holds, resistance is seen near 63.16 and 65.76. A break below $62 could open the way towards 61.60 and $60. Next up, let's have a look at our favorite spot gold, which climbed above $3,400 before the weekend, reaching 3409, which is its highest level since late July. The move is supported by safe haven demand on the back of trade tensions, weaker US labor market data, and rising expectations of a Fed rate cut. The potential appointment of a more dovish Fed chair has also added to the bullish momentum. Technically, gold is seeing resistance near 34.30, while support lies at the 50-day moving average of 33.50 and the mid Bollinger Band at 33.55. Momentum indicators remain positive, though the recent pace of gains has slowed down, which is signaling a possible consolidation. A move above 34.09 could see a test of 34.30, 34.39, while a drop below 33.50 may lead gold to go back to $3,300. Lastly, let's have a look at the Australian dollar, which strengthened from a low of 64.50 last week to trade near 65.42. This was driven by a weaker US dollar, solid Australian trade data, and stronger than expected Chinese trade surplus. Markets are fully pricing in a 25 basis point rate cut from the RBA this week, though a larger cut is seen as unlikely. Updated RBA forecasts are expected to show weak GDP growth and higher unemployment, which further supports the case for easing. Technically, the Australian dollar is trading above its 9-day moving average at 64.81. With RSI above 50, which is suggesting a positive short-term momentum. Upside levels to watch are 65.76 and 66 cents, whilst downside support is at 64.81, followed by 64.49 and the psychological level of 64 cents. That's all for today's morning market analysis. We'll continue to monitor the fundamentals and technicals as the week unfolds. As always, manage your risk and happy trading.